In my previous video, I shared 3 reasons on why you should not invest in Singapore REITs now, and the response was not bad as I got some views from our neighbourhood country as well. What is interesting is the age range of viewers for the previous videos are from age 45 and above, and all are males. Where are the ladies? I don't want to become Uncle 杀手 leh. Seems like most of the viewers here like to watch me talk about REITs. So in this video, I will share with you 3 non-REIT stocks that gives more than 5% dividend yield. These 3 stocks have more than 15 years of distributing dividend track record. As usual, this is not financial advice and we all share different views. So do your own due diligence. More importantly, click on the like and subscribe button so that we can unlock the next stage. Stock number 1, ComfortDelGro. We know that ComfortDelGro is the household brand in terms of taxis. However, the main contributing factors for ComfortDelGro, which contributes near than 80% revenue, are from the public transportation services. We can see from the revenue that ComfortDelGro is recovering. However, yet the company recovery is still not at pre-COVID level due to factors such as work from home policies, high interest rate, and inflation environment that impacts the operating cost, which is global. The current revenue as of 2022 is 3.78 billion compared to 3.90 billion in 2019. The cost of revenue over the past 5 years has also increased, which affects the profitability. Hence, the net income for ComfortDelGro is also nowhere near its peaks of 300 plus million in 2018, despite the net income recovery with stiff competition between ride-hailing app services. The good thing is ComfortDelGro is holding a lot of cash and short-term investments. As compared to 594 million in 2019, ComfortDelGro increased its total cash and short-term investments to 967 million, almost doubled. While we can see ComfortDelGro is recovering, the company is also prudent in distributing dividends. The net profit stands at 218.5 million with dividends of 107.3 million in 2022. This is a payout ratio of 50%, which is mandated for ComfortDelGro to pay out at least 50% of its earnings as dividends to shareholders. If we were to look back before COVID, the increasing dividend per share does not truly reflect that the dividends are sustainable as earnings are decreasing, hence the higher payout ratio. ComfortDelGro is currently in a slow recovery and with prudent capital management needed in order to increase the earnings. With current share price of $1.19 with 2022 dividends at 6.36 cents, the dividend yield is at 5.3% at a payout ratio of 50% for ComfortDelGro. Stock number 2, CSE Global. CSE Global is a solutions provider that taps on their engineering expertise to offer integrated systems solutions to their customers. CSE Global has presence in America, Asia Pacific, Europe, Middle East, and Africa, with customers coming from these 3 main sectors: energy such as oil and gas, infrastructure like transportation, power and water utilities, and mining and minerals. In 2022, the group acknowledged its execution mistake in one of US division that caused project overruns to 5.9 million. The overrun comprised material, labor, and subcontractor costs. Similar query was asked for the major project overrun that happened in the Middle East in 2011. And why wasn't the lesson learned? Well, as you could see from the response from CSE Global, was the cause of both overrun was due to human factors. However, the circumstances that led towards the cause between the 2 cases was different. Anyways, history does repeat. It was a challenging year in 2022 for CSE Global as supply chain disruptions resulted in longer lead time to convert order book into revenue, with increased operating costs, particularly in the energy sector in US. Coming to the summary of financials, revenue stands at 557.7 million in 2022 as compared to 468.7 million in 2021. Net profit dropped more than 60%. For the order book, CSE Global saw increase of over 100% in 2022 to 2021. There's recent insider trading with the CEO during March 2023 acquiring shares through the market. CSE Global at current price of 36 cents with distribution of 0.0275 cents per security, the dividend yield is 7.60% with payout ratio of 289%. Stock number 3, QAF Limited. In my previous QAF video, I shared about what you need to know in this rising food price crisis. QAF is an investment holding and management company which principal activities are manufacturing and distributions of bread and bakery confectionery products, operations of supermarkets, cold storage warehousing, trading and distribution in food and beverages, as well as production and processing of pork and feed meal. The bread you're eating now could be from one of them, and the chicken nugget you're eating later could be from one of them too. QAF has announced their 2022 financial results, and the main bulk of revenue are in the bakery and distribution and warehousing segment. The profit in 2022 as compared to 2021 dropped near 40% from 53 million to 19 million. The contributing factor for the decrease in net profit will be from the discontinued operations where the loss was materialized where a disposal of a production business to another party for main focus on the bakery, distribution and warehousing segment. Despite the rising operating costs and inflation factors, we still need to eat right. In good times, we eat more bread. In bad times, we eat even more bread. QAF has been consistently paying at least 5 cents as dividend since 2011 with a special dividend of 2 cents in 2022. Excluding the special dividend with current price of 86.5 cents and 5 cents dividend, the dividend yield for QAF stands at 5.78% with payout ratio of 110%. Let me know what are your thoughts on these 3 dividend counters and whether the dividend is sustainable moving forward. Do like and subscribe to my channel. Adios.